Hey there, and welcome back to Mauuak Saving Tips. You've ever watched the news or listened to market analysts? You've probably heard terms like bull market and bear market tossed around like everyone understands them. But do you? And more importantly, is Wall Street charging ahead like a bull or bracing for a bear attack in 2025? And how can you protect your money through it all? That's what we're about to uncover in today's video. This is part of our beginner-friendly series on the stock exchange market. It's created especially for viewers in the US who want to take control of their financial future. So, let us break down these two powerful market forces and learn how they can affect your investments and decisions in both the short and long term. Let's start with the bull market. A bull market is a time when stock prices are rising steadily, typically by 20% or more, and investors are feeling confident. It's often triggered by strong economic indicators like low unemployment, high GDP growth, and booming corporate profits. In this kind of market, there's excitement in the air. People feel optimistic, businesses are growing, and new technologies often emerge. The US experienced one of the longest bull markets in history, from 2009 to early 2020, and investors who stayed in the game during that time saw tremendous returns. Now let's talk about the bear market. This is when the market takes a hit and prices fall again, usually by 20% or more. It often coincides with a slowing economy, high unemployment, and falling consumer confidence. Bear markets can feel scary. People pull their money out of stocks. Portfolios shrink, and the overall mood turns pessimistic. But here's the thing. Bear markets are a natural part of the economic cycle. They don't last forever, and they often create massive buying opportunities for investors who stay calm and think long-term. So what's the real difference between a bull and a bear market? Besides the direction of prices, it's really about investor psychology. In a bull market, there's excitement and confidence. People want to invest more, take risks, and ride the wave. In a bear market, fear dominates. People become cautious, sell off assets, and avoid risks. The kind of market we're in can drastically influence investment decisions. In a bull market, people might focus on growth stocks or aggressive strategies. In a bear market, they may shift to dividend stocks, bonds, or cash reserves. The smartest investors understand how to adjust based on the market mood. So how do you invest wisely in each of these conditions? In a bull market, many investors ride the momentum. They invest in high-growth sectors like tech, consumer goods, or emerging markets. But it's also important to stay grounded. Just because prices are going up doesn't mean every stock is a good deal. In a bear market, many investors turn to value investing. This means buying strong companies at discounted prices. Others rely on dollar-cost averaging, which spreads your investments over time, lowering your risk. And if you're focused on income, dividend-paying stocks can provide stability even when markets fall. No matter the market, diversification, staying calm, and having a long-term mindset are always smart moves. So what should you take away from this? Whether the bulls are charging or the bears are roaring, you can succeed as an investor by understanding the cycle, managing risk, and thinking long-term. Don't panic during a downturn, and don't get greedy during a boom. Stay balanced, stay informed, and stay invested. If this helped clarify bull versus bear markets for you, give this video a thumbs up, leave a comment. And make sure to subscribe to Mauuak Saving Tips for more simple, smart financial advice made just for you.